You can binge watch every trading tutorial online and still end up draining account after account. So many people study countless strategies, memorize chart patterns, and recite risk management rules, almost like a ritual. Yet the losses keep coming. The truth is, this stubborn cycle isn't caused by a lack of intelligence, effort, or even luck. The real issue is that simply gathering information won't change your trading fate. Many traders hope that missing knowledge is the problem. They chase the next video, convinced it will finally clear things up. They search for that new method that promises consistent wins. But the answer isn't just more information. They pin their hopes on finding a mentor to fill the void. And so the cycle repeats: endless scrolling, piles of annotated charts, and notebooks overflowing with theory that rarely gets put into practice. Ironically, the more they try to learn, the deeper their confusion grows. Here's the bitter truth. Watching trading content often feels like progress, but it only masquerades as real improvement. There's a quick rush. It feels responsible, like you're moving forward. But the reality is, true growth comes from action, not just absorbing endless streams of information. On a psychological level, the result is often the opposite of what you hope for. When you watch trading tutorials, there's a surge of dopamine in your brain, almost like you've stepped into the action yourself. You finish feeling sharper, convinced you're closer to winning. Your self-image shifts from being a novice to seeing yourself as a well-informed trader. But these feelings, no matter how strong, don't lead to real change when your money is actually at risk. Trading isn't won by knowledge alone. True success comes down to what you can do when the pressure is on. This is the tough reality. Traders often blow their accounts, no matter how many lessons they've watched or how many mentors they have. The real gap isn't a lack of information. This is about lacking emotional resilience. Educational videos guide you through trading theory in a safe, risk-free environment. There's no fear, no ticking clock. You feel calm, ready to learn, and free from distractions. But once you're in the market, everything changes. The trading floor is unpredictable, moving fast, and full of emotional pressure. The person who studies comfortably is not the same as the one making split-second decisions with real money on the line. This gap is where countless traders are lost. But there's an even subtler danger. Trading content often sells a dream, instead of teaching true discipline. Across the internet, you'll see countless clips highlighting perfect setups, flawless entries, big wins, and charts that move smoothly up or down. When losses do appear, they're shown after the fact, stripped of any real emotion, and neatly explained away. Watching this, your mind starts to expect that same clarity and control when you trade for yourself. But real-world trading is completely different. It's gritty and uncertain, full of quick decisions and confusing signals. When you encounter the unpredictable wildness of real trades, reality often falls painfully short of those polished online examples. Suddenly, hesitation creeps in. You abandon your careful plans, rush in impulsively, or freeze altogether. Afterward, you scold yourself for lacking self-control, but the truth is, you've never been prepared for the emotional storm that real trading brings. And if that's not challenging enough, there's a flood of conflicting advice. One influencer says, always wait for confirmation. Another insists, jump in early. And yet another tells you, just follow the trend. The contradictions start to build up, leaving you tangled in uncertainty. Someone else says you should fade extreme moves. One person highlights the tiniest risks, while another urges you to double down when your confidence is high. You try to bring it all together, crafting what seems like the perfect plan, at least on paper. But when real stress kicks in, that plan falls apart. There's no clear set of priorities to follow. As soon as a trade goes wrong, a chorus of conflicting advice fills your mind. One voice urges you to hold steady. Another screams, get out now. A third calmly tells you this is just a normal bump in the road. Yet another insists you've made a terrible mistake. In those frantic moments, you're not really reacting to the market anymore. Instead, you're caught in a noisy debate with your own thoughts. This kind of mental traffic jam is why heavy content consumers often struggle most. Their minds are filled with conflicting rules, and doubt sticks with them at every turn. Making any decision starts to feel impossible. They have a wealth of knowledge, but their trading is driven by anxiety, not clarity. And there's an even bigger risk: the identity trap. After watching one expert after another, you start to believe you've mastered the art of trading. Suddenly, losses start to cut deeper. They bruise your pride, and every bad trade feels like a personal injustice. You catch yourself thinking, I should know better. That frustration lights a fuse, sparking revenge trades, compulsive moves, and even bigger risks. Instead of grounding you, all your accumulated knowledge just feeds your expectations, and before you know it, they swell beyond reason. So when reality doesn't match the mental blueprint you've built, emotions can erupt. There's another silent account killer. 2. Most educational videos tend to water down the importance of patience. Instructors talk about the importance of waiting for the right trade, but they rarely show you how to cope with the dull ache of inactivity, how to resist giving in to impulsive trades. Boredom is one of the most insidious enemies in trading. When you feel restless, your brain hunts for any kind of stimulation. Suddenly, the charts start to tempt you. A small price movement, a quick flicker of a candle, the promise of instant feedback, they all become irresistible. Before you know it, you're clicking into trades that break your plan. Not because you forgot your rules, but because your nerves are craving excitement. No video can truly protect you from that inner itch. Only through conscious practice and honest self-reflection can we build real resistance. But there's another shadow to watch for: confidence that comes too easily, without true experience in the markets. Sometimes, listening to seasoned traders speak so confidently can give you a false sense of mastery. You start to feel prepared, even though your emotions haven't really been tested. This can lead to risking more money before you've developed the psychological strength to handle the pressure. Often, live trading begins too soon, while emotional stability is still just out of reach. And when setbacks happen, the emotional blow hits twice as hard because you weren't truly ready for it. Let's pause here. Do you often struggle with anxiety, self-doubt, or the urge to overtrade? The truth is, most setbacks in trading don't come from poor strategies, they come from psychological pitfalls. That's exactly why I wrote my ebook, Master Your Mind, Master Your Trades. Inside, you'll find practical techniques to help you master your emotions, stay disciplined, and trade like a true professional. If you're serious about taking your trading to the next level, check out the link in the description or the pinned comment to get your copy now. Now let's get back to the main point. This is the real reason why your demo account successes don't always translate to live trading. The emotional stakes just aren't there in practice mode. Without the sting of real loss, your habits don't change. There's another subtle danger too. Most traders never learn how to lose well. Tutorials might show you where to set your stop, but they rarely talk about truly accepting loss. They don't guide you through processing it without spiraling out of control. So when those inevitable red days come, your reaction is often denial, procrastination, or a frantic rush to recover. Losses then turn into battles to win, instead of setbacks to understand and manage. Here's a lesson many people miss: consuming endless trading content won't build self-trust. Instead, it makes you rely more on outside voices. Your decisions start to depend on experts' opinions, not your own inner compass. When discomfort creeps into a trade, your confidence begins to shake. You find yourself searching through mental archives of advice, looking for answers, instead of trusting your own judgment. That uncertainty clouds your view. The reason professional traders stand apart isn't because they know so much more than you. It's because they trust their system, their practice, and their routines they've worked hard to build. That kind of trust is built through action, by taking real trades, reviewing what you've done, and repeating the process until every step feels natural. No amount of watching content can replace that experience. The market doesn't care how hard you try. It doesn't count the hours you spend on tutorials. What really matters is the balance between your mindset, the risks you're willing to take, and the accuracy of your actions. Until you find that balance, all the knowledge in the world is just noise. That's why blowing up an account is almost never about not knowing enough. This is about habits formed by constant searching, not steady practice. You've been taught to chase new answers instead of building real discipline to gather more techniques rather than refine your own responses. It's easy to stay busy, but much harder to strive for true consistency. Everything changes when you stop searching for the next video and start noticing how you react under stress. Pay attention to your behavior when things go wrong, when boredom sets in, when fear appears, or when confidence is high. That's when you really start to face the heart of the challenge. Most people stay stuck, trapped in a cycle of endless learning. But if these words are resonating with you right now, it means you're already heading in the right direction. The real risk in watching every trading video out there isn't a lack of information, it's having too much. You start collecting knowledge faster than you can actually use it in your own trading process. So when the market heats up, your mind doesn't always go for the smartest strategy. Instead, you reach for whatever feels safest in the moment, emotionally speaking. This is the point where many traders, without realizing it, set themselves up for trouble. After all, our brains just aren't built to perform calmly under financial stress. The moment money is involved, your survival instincts kick in. As soon as you open a position, your body reacts, your heart races, your senses narrow, and time feels distorted. Suddenly, the calm, rational part of you disappears. The version who binge-watch trading videos is gone. Instead, you're driven by a primal urge for relief. And relief doesn't mean making the most profit. It means easing emotional discomfort. That's why traders often cash out too early, move their stop losses to avoid pain, or freeze up just when opportunity appears. These behaviors aren't random. Each quick exit, every small hesitation, these are ways people try to relieve inner tension, not simple mistakes. Most instructional videos tell you what to do, but they rarely address the deeper impulses that drive your decisions. That highlights another issue. Most trading education focuses on showing you the final results, not the process it takes to get there. You watch as charts jump from entry to exit and losses flip to wins, but you're never guided through the mental noise that fills those in-between moments. The self-doubt you feel during losing streaks, it stays hidden, never addressed. There's a drawn-out boredom that often goes unspoken as you wait for a clean setup. Because of this, when uncertainty or long periods of waiting finally do come, the discomfort can feel strange, even threatening. In those moments of distress, your mind is quick to make impulsive decisions. That's why so many traders abandon solid plans right when discipline matters most. It's not about having a bad strategy, it's because the emotional strain simply outweighs tolerance. A quiet dependency can also develop. Each new video promises instant insight. Every fresh strategy suggests results will come easily. Before you know it, you find yourself chasing comfort, not actually striving for real growth. When you feel confused, frustrated, or stuck in a rut, you turn to yet another trading video. This starts a familiar cycle. Uncertainty leads to binge-watching, which gives you a short-lived sense of confidence. With that temporary boost, you start trading more aggressively. Losses usually follow, and soon enough, you're right back where you started, confused. The loop goes on, slowly draining your trading account. There's a subtle danger here that's easy to overlook when you binge on trading content. You train yourself to react to the markets on impulse instead of acting with intention. Suddenly, you spot trade setups everywhere, and every movement on the chart starts to feel urgent. You feel the urge to react to every signal. Your focus scatters, jumping from one candle to the next, never pausing for real opportunities. This constant alertness wears you down, leading to mental fatigue. As exhaustion sets in, it gets harder to follow your rules, not because you want to break them, but because your mind just can't keep up. The difference between professionals and those still struggling becomes clear. Professionals simplify their decision-making, making it sustainable for the long run. Meanwhile, newer traders add more complexity, hoping for a sense of control. Timing is important too. Many people rush into advanced methods before truly mastering the essentials. They move quickly to complex strategies without first building a strong foundation, like knowing how to manage risk, developing patience, and making clean, disciplined trades. This often leads to a fragile kind of confidence. On the outside, you may seem sophisticated, but underneath, your skills aren't as stable as they should be. When the market gets turbulent or suddenly changes, that shaky base falls apart quickly. There's another trap to watch out for: confusing understanding with true integration. It's easy to recite the rules of risk management, but when the pressure is on, it's much harder not to break them. You might know the principles of discipline, but in a heated moment, it's easy to react on impulse. Knowing is one thing, doing is another, especially when stress runs high. Trading puts a spotlight on the gap between how you see yourself and the decisions you actually make. Standing in that space can feel uncomfortable, and rather than face that discomfort, most people choose distraction. They turn to more information, stay busy, and hope the next answer is somewhere out there. But the truth is, the real solution lies within. There's also another layer: the problem of trust. Taking advice from a wide range of traders can leave you feeling confused about whose guidance to truly trust. The outcome? You rarely stick to a consistent set of rules for long. Instead, your decisions become emotional, not structured. If a trade seems promising, you might convince yourself it's okay to bend the rules. When a trade feels risky, you might abandon your plan completely. In both cases, emotion is in control. This lack of consistency undermines your trading expectancy, the core math that gives a strategy its edge. Without that, even the most promising system will eventually fail. There's also a more subtle challenge: missing out on a true feedback loop. Many traders spend their time watching videos, but they don't always take an honest look at their own behavior. Sure, they might keep track of their wins and losses, but they rarely pay attention to their emotions. Most will analyze charts, not their own choices. As a result, mistakes turn into patterns, repeating again and again. Real progress happens when you dig into those habits you'd rather avoid, things like impatience, fear of missing out, seeking approval, wanting to be right, or just trying to avoid boredom. All these personal quirks show up in your trading, day after day. No video can get rid of them. Only by becoming aware of them can you start making real changes. Account blow-ups don't happen by chance. Most of the time, they're caused by internal struggles we leave unaddressed. Inside, one part of you craves order and routine, while another seeks excitement. One voice wants comfort, and another pushes you to go further. If these inner drives aren't aligned, they end up battling each other when you trade. Sometimes you play it overly safe. Other times, you take reckless risks. This back and forth may seem confusing, but it's rooted deep in your psychology. Here's a truth many avoid: the market doesn't create these tendencies. It amplifies the ones you already have. If you avoid discomfort in your everyday life, you'll likely avoid it when trading too. If you're always chasing excitement, you might find yourself jumping into impulsive trades. If patience is hard for you, trading will make you face it, sometimes in tough ways. That's what makes trading so personal. It's not just about money, it reaches into who you are. When you blow up an account, the loss cuts deeper than just your finances. It can feel like a wound to your identity. But there is a way to change this. The goal isn't to get rid of emotion, it's to understand your feelings and learn how to guide them. Fear, doubt, and frustration don't disappear even for the best in the business. Professional traders feel the full range of emotions. The key difference is they don't let those feelings control their actions. This kind of emotional control isn't learned from books or tutorials. It's built through consistent practice, by taking calculated risks, reflecting on emotional responses, trusting proven routines, and sometimes even reducing trade size until reactions are under control. Watching more videos won't give you this resilience. If you're always searching for information to outsmart your emotions, the destructive cycle will simply continue. Real progress in trading begins the moment you realize your greatest weapon isn't a secret indicator or a clever entry. It's mastery over your own impulses. When you stop searching for external fixes and focus on building true discipline, your trading account finally stops self-destructing. Every trader who wipes out their account again and again eventually comes to a quiet moment of clarity. They see the block was never about not knowing enough, faulty strategies, or even the market itself. The real challenge was this: trying to solve an emotional puzzle with only technical tools. Because in the end, true mastery in trading doesn't come from learning the most complex charts, it comes from learning yourself. Trading is tough because it forces you to face constant uncertainty, with almost no sense of control. Our brains are hardwired to dislike not knowing what will happen next, even more than fearing loss itself. Every time you place a trade, you're putting yourself out there. You become exposed, waiting as your money sits in the market, and tension starts to build. That tension is always looking for a way out. If prices move in your favor, you feel a wave of relief. But if the market stalls or moves against you, discomfort creeps in. Eventually, when that discomfort becomes too much, you react, and those reactions rarely come from logic. Many people think blowing up an account comes from one big mistake, but in reality, it's often a series of small emotional decisions, increasing your position size just a little, trading because you're bored, moving your stop loss a bit further, or taking trades just to feel like you're doing something. On their own, these decisions might seem harmless, but together they build up quietly, and that can be deadly. Markets don't punish you for not knowing enough. They strike hardest when you're inconsistent. One of the most dangerous times for any trader comes when some skill meets rising confidence. At this point, you know more than a beginner, but you're still not in complete control. You can spot the setups, you understand the mechanics, you can even break down why a trade failed, but your actions lag behind your growing knowledge. This creates a dangerous illusion, a feeling that you're in control of the outcome. Losses are brushed off as temporary setbacks, not as warning signs. You keep thinking that the next trade will erase your last mistake. You convince yourself that your breakthrough is just around the corner. Instead of pausing to regroup, you push forward, and that quiet, steady erosion leads to account ruin. There's another tough truth that traders rarely talk about sometimes. Blowing up an account isn't just an accident, it can satisfy an emotional craving. For some, it's the thrill of excitement. For others, it's a way to break the monotony with a sudden rush. And for a few, it connects to deeper patterns of self-sabotage woven into their identities. When success feels unfamiliar, failure can actually feel safer, almost like home. Until you recognize the emotional rewards that trading gives you, these financial patterns will repeat losses over and over. Many traders claim they're searching for steadiness, but if you look closer, you'll see the truth. Most are actually chasing a thrill. Real consistency is a quiet force. It's monotonous, repetitive, almost boring. It won't give you adrenaline rushes, epic stories, or put you in the spotlight, but excitement will. Without realizing it, traders create chaos in their own process. They overtrade, take on too much risk, or stray from their plans. Then, they blame it on a lack of discipline. But the real problem, they never chose consistency in the first place. What they were really after was excitement, disguised as ambition for greatness. Another subtle danger lies in what happens to your sense of self-trust. Repeatedly blowing up your accounts chips away at your confidence. When you start losing faith in your own judgment, even the most promising trade can feel daunting. You might freeze when it's time to act, jump in when you should hold back, constantly seek approval, or second-guess every exit. The market becomes a cold mirror, reflecting your self-doubt right back at you. Uncertainty then fuels emotional decisions. That's why truly bouncing back isn't about chasing the next secret strategy. The real journey begins with restoring faith in your own choices. Rebuilding trust isn't about scoring one huge win. It's about getting the basics right, again and again, even when those wins seem small or insignificant. When you stick to your setup and follow your plan from beginning to end, even once, it boosts your confidence far more than a streak of impulsive victories ever could. True consistency comes from practicing with minimal risk. That means trading with small enough stakes so that any single loss can't rattle your nerves. Yet most people hesitate to cut back on trade size. They want big profits right away. But ironically, those big positions are exactly what keep them stuck in a cycle they can't escape. You can't build emotional discipline if the money you're risking is enough to make you anxious. Another obstacle is avoidance. Many traders don't want to face their worst trading days honestly. They dig into charts, but overlook their own behavior. They focus on trade entries rather than their inner state. Journaling? That feels uncomfortable because it asks for true accountability. All the while, the same damaging patterns repeat themselves, hidden in the background. The cycle of blown accounts only ends when self-awareness replaces denial. True progress starts when you stop making excuses and start observing yourself, honestly and without bias. Trading isn't just about writing down what you buy or sell. It's about paying close attention to how you feel before you get in, while you're holding, and after you exit a position. Being this honest with yourself can feel uncomfortable, even harsh at times, but that honesty is the key to real growth. Every trader who finds lasting success comes to a critical realization: the market doesn't care how hard you work. Effort by itself means nothing unless it brings your game plan, your actions, and your emotions into alignment. If these three aren't in sync, putting in more work is just wasted energy. And here's something many people overlook: trading is a long-term performance craft. Like top athletes or surgeons, consistency doesn't come from flashes of motivation. It comes from relentless conditioning. Outstanding performance doesn't just show up when you feel good. It happens because you've trained yourself over time to do the right things, regardless of how you feel. That kind of training only takes hold when you focus less on profits and more on mastering your own habits. Success changes the moment you measure it by how well you stick to your rules, instead of just looking at the bottom line. That's when you recognize your trading edge can only grow if you manage to survive over the long run. Blowing up accounts often comes down to impatience. It's a frantic rush to cram years of learning into just a few months. Many people dream of mastery but skip the endless practice it requires. They want confidence, but they don't want to endure setbacks. Still, the markets don't care how fast you want to go. They'll slow you down, humbling anyone who tries to hurry. The traders who finally stop the cycle of blowing up their accounts don't suddenly get smarter. What changes is their temperament. They take a step back. They trade less often. They scale down their risk. Most importantly, they get comfortable with waiting. They learn to accept missing out and to value small wins, even those uneventful days. Instead of fighting the market, they start focusing on managing their own behavior. This is a real turning point. You realize your job isn't about making grand predictions, achieving flashy wins, or trying to impress anyone. The real goal is to follow a solid process, act with discipline, and make sure you can come back to trade another day. Little by little, the pressure eases, your decisions become clearer, and losses don't feel so personal anymore. Quietly, and often without fanfare, your trading account begins to stabilize. This is the chapter that rarely gets attention. There are no heart-pounding moments, no social media-worthy breakthroughs, and no dramatic scenes of overnight redemption. Instead, we see a trader who finally understands account blowups weren't about missing information, they were about missing self-control. When that truth sinks in, real transformation begins. It doesn't happen in a flash or through a stroke of luck, but with a lasting effect. This is the true moment when the cycle is finally broken.